Hello, this is the chart profit video, approaching 1.5 hours into the trading day on Friday 28th of April. Looking here at the pre-open, looking at the E-mini S&P. This level down here is the 3-month controlling price at 23.53. If you're bullish, you want to see price remaining above that level. Over here, this is support. I suggested earlier in the week that the distribution, which I believe began 3 months ago, may have completed. I've said that if the 3-month distribution up here is still developing, then 23.71 will be resistance, which is this dotted line here. That is the value area high of that distribution. Would normally reject any probes above it if the distribution is still developing. So value areas, and we've had 3 of them now above that level, add evidence that that distribution may have completed and we're into something new. If this is a new distribution, then it looks as though it has an upward bias. And as I said today and yesterday, price above that value area high is a good sign. Certainly wouldn't want to see price back underneath that, and certainly not back to the 3-month point of control down here. I'm taking price action this week as a positive indication. As I mentioned up here, breadth numbers have improved this week and momentum on the spider chart. If you look at the pulse chart, you'll see it as well. The price oscillator is now positive. So here's the pulse chart. This is here. You have daily momentum, the price oscillator now above 0, and the breadth here has improved. So this is a better looking pulse chart than this area here. Let's quickly look at the breadth indicators that gave us this green indication. You can see the bottom 2 indicators here for our New York chart. Net new high is 25. Moving average is above the 0 line, and the percentage stocks in my New York list above 50. So on the S&P, as you can see at the top here, approaching its previous high. Sentiment in the bottom, as indicated by my version of the Ridex assets ratio, is up a little yesterday, just above 11. Here we've seen it up to 14, as you know, only the second time we've seen this indicator print above 14, and that was on the high day over here on the 1st of March. If the market did push higher and we saw an increase in bullish sentiment, this ratio increase, anything back up testing that 14 level again would certainly be a cause for concern, remembering that these are contrarian indicators. Looking at the public poll from AAII, we certainly did see an increase in bulls percent this week. It was sharply higher at 38%. That's a 9-week high, up from 25.7 previous week, which was a 24-week low. Bears percent was down at 31.7. The 4-week moving average of the net figure, that's the bulls minus the bears, that's the black line down here, that's the 4-week moving average. That's at a negative 6.6. Up from the previous week's negative 9.97. That was a 24-week low. So price saw a correction of about 7 weeks here, and sentiment as measured by this 4-week moving average of net a week ago was at a 24-week low. Saw an increase in bullish sentiment this week in the Investors Intelligence poll. The bulls percent was higher at 54.7%. Just 4 weeks ago over here, that number, the bulls percent, fell to 49.5. That was a 20-week low. Looking here at information from the Lipper US fund flows. Data they reported equity fund, including ETF inflows, of 7.2 billion this week. That's a reasonable net inflow for a week. But as you can see here, the 4-week flow number remains negative. So over the last 4 weeks, there's been a net outflow of funds. Okay, we'll look at some live charts. This is the E-mini S&P that we discussed earlier. Half-hour basis, you can see 23.71 down here. That's that 3-month value area high, which I suspect is of a distribution, the last distribution that is now complete, and all of this time here printed above that level. So for a good 3 days now, we've seen the E-mini oscillating, finding value around this level here, just above 23.84. Certainly not yet a rejection of price up here. This is the spider. The 3-month comes in at 236.18. This level here, that's the 3-month controlling price. Price is currently printing above that level. First sign that something is seriously going wrong would be price. The spider back below that level, printing time down here. Small caps have had a good week. Russell 2000 recovering here. last week back above its 16-month point of control at 136 and has moved up to that's a new all-time high. Price back below here, below 136, would be a real negative. This is TLT, the T-bond ETF. Interesting chart. In this period here we saw the 8-month point of control, that's the controlling price of the current distribution, moved up to 121.63. The major is lower down here at 119, but this right now, this level here, appears to be providing support. Not convincingly, I have to say, this week, but we have stalled here. Price just back underneath here next week would indicate a retest of this major level, this major support at 119. Currently we're hanging in there. Something very similar on the gold chart, GLD. The major point of control is at 119.84. That's this level here. Previously resistance. You can see that there, and again here in March. In April, late March, April, we've seen the chart auction above that resistance, also above its halfway point, a little lower here from this high to this low. And this area here will be support. If gold is now in an uptrend, it's been making higher lows off the November low over here, December low, so we have support from the halfway point, the major controlling price, and the previous high. If you're bullish on gold, we don't want to see too much time printed back below this level. So that's gold and bonds at support, and oil. Actually, this is the oil ETF, USO. From this low to this high, the halfway point is here, previous support in February, and again here in the longer term, as I've mentioned pre-open, consistently the fact that the chart is printing below its major, which is up here at 1144, means in the longer term, unless that controlling price migrates, this chart is in a weak price location here. So this may be temporary support, and as I've said again many times, oil may be a problem for equities. So we want to see this support holding. Price down here below 10 would be a negative. Just to remind you, all these levels I'm showing have been established on the charts for a few weeks now at least. Here's another on the dollar index up here, the 6-month at 101. We had a probe into that controlling price, and that's been rejected, and the dollar index is in a weak price location below that level in the longer term. Just to reinforce that, we're looking here at the Euro FX, the 7-month down here, 1.0597, and we've seen support in April at that level and rallied from there. In a very long-term time frame, this chart below the major up here at 113.29 puts it in a weak price location, but in the intermediate we're currently in a strong price location above that support. The pound has clearly improved. We saw, if you remember, from this high to this low, the halfway point here was a couple of times support, and that is a higher low at that level. And then we've seen last week a spike higher on the announcement of the UK election. Pound dollar currently on its highest level since last October, and the big level here is 124.78 in here, which is the 15-month point of control. So the pound in a strong price location, dollar weak on this chart, dollar also weak in this chart against the yen. The 4-month up here at 113.61, we're currently below that level, and unless that 4-month migrates lower, this looks like a long-term weak chart. Okay, here we have May approaching. This is a composite chart of all the Mays in the 7-year, so it's the decade cycle, going back over 8 decades. Looks pretty mixed after about the 10th. In fact, before that we have a reasonably bullish period according to this cycle. Ignore the dates at the bottom here. This is the first 10 days, actually calendar days, of May for the stock market. So if we look here at a kind of idealized version of the composite May, rebased to 100 here, starting point. May starts off well through to about the 9th, or a little earlier, maybe the 6th, 7th here, and then we see weakness through to mid-month and then a recovery. Okay, we'll see how that plays out. Most importantly, we'll monitor the behavior of the market and the price action relative to those important levels in the charts. Okay, that concludes. Once again, I wish you a good weekend and thank you for watching.